Hello and welcome to you all. So in this video we are going to see the reverse charge tax mechanism in Odoo. So for this demonstration I have installed Indian chart of account and Indian localization module. So what is the reverse charge tax mechanism? So it is the mechanism in which the responsibility to paying the tax to the tax authority is transferred from supplier to the customer. So in general scenario where supplier sells some services or goods to the customer is responsible to pay the tax to the supplier, and then the supplier is responsible to pay this particular tax to the government or tax authority. So this scenario, it is called forward charge tax mechanism. So let's see what is the forward charge tax mechanism in Odoo, and then we will see what is the reverse charge tax mechanism. So let's jump to the accounting module. I am creating one customer invoice. So I am selecting one customer, Tata Technology, and I am selling services to them worth of 1000 rupees. And I have applied 5% of IGST to the particular customer invoice. So at the end, I am confirming the invoicing, and I can see on 1000 rupees of untaxed amount, we have a IGST, 50 rupees of IGST, which the Tata Technology will pay to the supplier, and then the supplier is responsible to pay this IGST to the government. If we are jumping to the balance sheet, we can see on a receivable side we have a 1050 rupees, and on a liability IGST payable account we are liable to pay this 50 rupees of IGST to the tax authority. And if we are jumping to the tax return report, we can see the tax report. I'm just checking with the generic. So on a generic tax report, 5% of IGST tax is applied. So on a selling of 1000 rupees, I need to pay 50 rupees of tax, and this we can see on a GSTR1 report as well. Now this is the forward charge tax mechanism. Now we can see how the reverse charge tax mechanism is configured in Odoo. So for that we need to go to the configuration, taxes, and currently I have installed Indian chart of account, so we can easily find the reverse charge taxes on it. So let me open any reverse charge taxes. So this is the 80% of IGST reverse charge taxes. So for that we just need to check this reverse charge field, check this boolean true. So this tax is working as it is treated as the reverse charge taxes. So now let's see how the reverse charge tax is working. Create one vendor bill. I'm going to vendor bills, and I'm selecting one vendor, MK Private Limited. I'm just adding one bill date, and I'm purchasing services from them. Again, but we are going to same amount, 1000 rupees, and instead of 5% GST, I'm going to select the reverse charge, 80% of IGST reverse charge. So on a selecting of the taxes, we can see 1000 rupees of an untaxed amount. IGST I have to pay nothing, because in a reverse charge taxes the responsibility to paying the tax to the tax authority is on a vendor, or we can say the recipients. So on our case we have to pay nothing, which is 1000 rupees. We have to pay nothing, only the service charge which is the 1000 rupees we need to pay to this particular vendor. And if I'm confirming this, we can see on a general item we have two accounts, which is a reverse charge GST on purchase and IGST payable. So they nullify our tax, 180 rupees of tax, which is nullified, and at the end we have to pay only 1000 rupees. Now let's jump to the reporting. So if we can see the balance sheet report, so on a balance sheet report, here we can see a payable side we have to pay only 1000 rupees, and on a IGST payable and reverse charge GST they are nullifying the 180 rupees of tax, so we need to pay only 1000 rupees. And if I'm jumping to the tax report, let me select the generic tax report. So on a generic tax report, we can see 80% of IGST. So on a purchasing of 1000, I have to pay nothing. So this is the reverse charge tax mechanism, where the responsibility to paying the tax is on a recipient side. But if I'm changing to the 3B reports, we can see on a 3B reports, the inward supply reverse charge sections, we can see on 1000 rupees of purchase, IGST 180 rupees of IGST we can see over here, and we are eligible for ITC over the E. So on a reverse charge taxes, we are eligible for ITC, which is called input tax credit, and on a section 3 we can see inward suppliers liable to reverse charge. We can see the 180 rupees of IGST, we are liable for ITC. So this is how you can use the reverse charge taxes. And specifically for on Indian accounting, the reverse charge taxes applies on a case like a cross-border transactions where they are not know about the tax compliance, or we are purchasing something from the unregistered GST unregistered suppliers. So because they are unregistered, so they are not claiming the GST, or they are not registering that GST to the government or tax authority. So that's why we are purchasing something from the unregistered supplier. We are marking that vendor bill as we are using the reverse charge tax mechanism over that scenario. So I hope guys you like this video and you know the difference between reverse charge taxes and forward charge taxes. And please like this video, and if you like this video then please like and subscribe my YouTube channel. Thank you for watching.